Most people believe wars start because of ideology, security, or history, but what if that explanation is only half the truth? What if, behind the speeches and flags, there is a quiet financial engine humming along, turning destruction into profit? Imagine bombs as balance sheets, tanks as revenue streams, and battlefields as marketplaces. It sounds uncomfortable, even offensive, yet the money trail tells a story that rarely makes the evening news. Stay with me, because by the end of this video, you may never look at war the same way again. Welcome to Meta Finance Lab, where you can get more informative videos related to finance. You can subscribe to the channel for timely updates. To understand how money and war became so deeply connected, we have to go back hundreds of years, long before modern defense companies or stock markets existed. Early wars were funded directly by kings and empires, often through heavy taxes or looted treasure. Armies were expensive, but rulers accepted the cost because war meant land, power, and control. What changed everything was the realization that war could be financed by borrowing money, and that debt itself could become a profitable business for lenders who never set foot on a battlefield. One of the earliest examples comes from Renaissance Europe, when powerful banking families loaned money to monarchs to fund wars. These bankers charged interest, and the longer a war dragged on, the more interest piled up. Peace was actually bad for business, because it stopped the flow of payments. Over time, governments became addicted to borrowing for war, and financiers became experts at predicting which conflicts would last the longest. The seed was planted. War was no longer just a political act, it was a financial opportunity. Fast forward to the 18th and 19th centuries, when nation-states and global trade expanded rapidly. Wars grew larger, more complex, and far more expensive. Governments began issuing war bonds, asking citizens to lend money to support the war effort. On the surface, this looked patriotic, even noble, but behind the scenes, large investors bought massive amounts of these bonds, earning steady returns backed by government promises. The average citizen felt proud to help, while wealthy investors quietly locked in profits. Here is where things get interesting. As industrialization took off, wars required not just soldiers, but weapons, uniforms, ships, and later airplanes and tanks. Private companies stepped in to supply these goods. At first, they were small manufacturers filling government orders. But as wars became global, these suppliers grew into enormous corporations. Suddenly, peace meant shrinking demand, while war meant guaranteed contracts, often with cost overruns fully paid by taxpayers. By the time World War I erupted, the financial machinery of war was fully operational. Governments borrowed unprecedented sums, and arms manufacturers saw explosive growth. Some companies doubled or tripled their profits in just a few years. When the war ended, many people expected accountability. Instead, something else happened. These companies reinvested their profits, expanded their political influence, and positioned themselves as essential to national security. The groundwork for the modern military-industrial system was laid. World War II took this system to an entirely new level. The scale of production was unlike anything seen before. Factories ran around the clock, producing weapons in staggering quantities. Entire cities depended on war production for jobs. Ending the war would mean economic disruption, layoffs, and political backlash. Leaders began to face a dangerous dilemma. How do you return to peace without crashing the economy that now depends on war spending? After World War II, a famous warning was delivered by a U.S. president who had seen war from the inside. He cautioned against the growing power of what he called the military-industrial complex. His message was clear but unsettling. When defense companies, politicians, and military leaders become too closely linked, decisions about war and peace risk being influenced by profit rather than public good. Many people nodded, then moved on, assuming the system could be controlled. But could it? The Cold War provided the perfect environment for war spending without open warfare. The threat of conflict justified massive military budgets year after year. Defense companies thrived, research contracts flowed, and shareholders benefited from predictable government spending. Even without large-scale battles, the business of preparing for war was incredibly lucrative. The question few people asked was who benefited the most from this permanent state of readiness. Then came the late 20th and early 21st centuries, when warfare itself changed. Conflicts became more regional, more prolonged, and more complex. Instead of clear victories, wars stretched on for decades. From a financial perspective, this was ideal. Long wars meant recurring contracts, maintenance agreements, and endless upgrades. New technologies like drones, cybersecurity systems, and surveillance tools opened fresh revenue streams that did not exist before. Here is a shocking data point that rarely gets discussed. Over the past 2 decades, global military spending has exceeded $2 trillion per year. A significant portion of that money flows to a relatively small number of corporations. These firms are often publicly traded, meaning their profits directly benefit investors. Pension funds, mutual funds, and even retirement accounts can be indirectly tied to war profits without most people realizing it. You might be wondering, does this mean ordinary people are complicit? Not intentionally. The system is designed to be invisible. When a retirement fund invests in a defense contractor, it is framed as a stable, low-risk investment. Few investors stop to ask how that stability is maintained. The answer, uncomfortable as it may be, often involves ongoing conflict or the constant threat of it. Another layer of the hidden money behind wars lies in reconstruction. When bombs stop falling, rebuilding begins. Roads, bridges, hospitals, and power grids must be repaired or replaced. Guess who gets those contracts? Often, the same companies that profited from destruction now profit from reconstruction. It is a full-circle business model. Destroy, then rebuild, both funded by public money and international loans. Consider the role of private military contractors. These are not traditional soldiers, but hired forces paid by governments. Their numbers have grown dramatically in recent conflicts. They operate with less transparency and, in some cases, higher costs. For investors, these companies offer another way to profit from war without being directly associated with national armies. For taxpayers, the bills quietly pile up. At this point, you might ask whether this system ever reaches a breaking point. History suggests it does, but not in the way people expect. Instead of collapsing, the system adapts. When public opposition to war grows, conflicts are reframed as peacekeeping missions or security operations. Budgets are justified as defensive rather than offensive. The money keeps flowing, just under different labels. The fallout, however, is real and measurable. Massive military spending often crowds out investment in education, healthcare, and infrastructure. Governments accumulate debt that takes generations to repay. Meanwhile, defense stocks continue to perform well, especially during times of global instability. The gap between those who profit and those who pay widens quietly but steadily. Attempts to fix this system have appeared over the years. Calls for transparency, reduced military budgets, and ethical investing gain attention after major conflicts. Yet these efforts often fade as new threats emerge. Fear is a powerful motivator, and fear opens wallets faster than hope ever could. The financial networks behind war understand this deeply. Let me share a simple anecdote that brings this closer to home. Imagine 2 neighbors. One owns a company that installs security systems. The other lives in constant fear of break-ins. The more fear there is, the more systems get installed. Now imagine that fear being amplified on a global scale, with billions of dollars at stake. The incentive structure becomes clear very quickly. Modern parallels are everywhere if you know where to look. Rising geopolitical tensions often coincide with spikes in defense stock prices. New conflict zones lead to new funding bills passed with overwhelming support. The language used is about safety and stability, but the financial results are about growth and returns. Patterns repeat, decade after decade, with remarkable consistency. Here comes the twist many people miss. Not everyone involved is driven by greed alone. Many engineers, workers, and even executives believe they are contributing to national defense and technological progress. The system does not rely on villains twirling mustaches. It relies on incentives that reward certain outcomes regardless of intentions. That is what makes it so resilient. So where does this leave us today? We live in a world where war is both a tragedy and a business. The money behind it is sophisticated, layered, and deliberately opaque. Understanding it does not mean endorsing it, but ignorance only strengthens it. Awareness is the first step toward meaningful debate and, potentially, change. As we reach the end of this story, let's bring everything together with 3 clear takeaways. First, war has been intertwined with finance for centuries, and modern systems have made that connection stronger, not weaker. Second, a relatively small group benefits disproportionately from ongoing conflict, often shielded from public scrutiny. Third, repeated attempts to reform or limit war profiteering have failed largely because fear and financial incentives overpower short-term outrage. The open-ended question is whether future generations will accept this as inevitable or demand a different model. If this perspective challenged your assumptions, take a moment to reflect, share it with others, and stay curious. Meta Finance Lab brings you useful knowledge and insights to help you understand the world of finance. Subscribe to stay informed and share with others who need this information.